Earlier in the session, we did start to see a little bit of firmness in the market, but that has waned, and we are trading mostly lower all the way across the board. But let's get you up to date on the latest numbers. Here this morning, we saw corn down just about 1 to 2 pennies for a good part of the morning. And right now, we're down 3/4 on the nearby contract at 342 3/4. July corn down 1 at 371 1/2. Let's pause right here and bring in Brian Splitt. He is with Allendale Incorporated in McHenry, Illinois. First of all, Brian, this corn market, wow, did we damage the charts last week? And can we overcome that chart damage, do you think?
I don't know how damaged the chart really is. Granted, we did make a new contract low, but, this corn market has gotten in the habit of making new contract lows by a penny or two and then finding some support and then bouncing. I think the trade is very well aware right now that the managed money is either very close to a record short position or making a new record short as far as the size of their position. So I wouldn't be surprised to see a little bit of short covering a little bit later in the week. We also have seen December options very frequently expiring above 350. There's really only 2 years in the past 11 where December futures were below 350 come the December option expiration. One of those was back in 06, and the other was last year. So, and the most we've been below 350 was 11 cents. So I think there could be a little bit of additional downside in the short term, but I think the market took that bad news last week on the report pretty well, to be honest with you.
All right. Well, if we go down and we test some support, or even if we don't, a lot of producers I talk to say that basis is very, very soft right now. It's just kind of it's one of those deals where they'd like to sell some maybe some corn here before the end of the year to pay some bills, but otherwise it's just going to keep the bin locked up. And so basis is going to have to also firm, I think, before we start dragging any of this corn out of storage, right?
Yeah, I mean, that's one of the things that the producer obviously wants to see is a little bit further firmer basis. Typically, if we do get some bounces in futures, the basis is not going to accommodate that. So this may be a point in time where the producer has to do what he can to arbitrage the futures and the basis. So if we do get a downdraft in the futures, that's probably a point in time where the producer might want to look at some basis opportunity. Just in general, a lower futures market will firm basis, and a bounce in the futures market will widen that basis out. So I don't think the producer is going to get both at the same time. So they're going to have to look at locking in one and then most likely the other at two separate time frames.
All right, let's review what's going on here with the soybean market and the wheat market. I want to get your thoughts here, Brian. First, the soybeans, November down 2 1/4, 9.75. July down 2 1/4 at 10.13 1/4. July Chicago wheat down 4 1/2 at 4.68 1/2. That nearby contract of December is down 6 3/4 at 4.24 3/4. December Kansas City wheat down 5 1/4 at 4.28. December Minneapolis wheat down 12 1/2 at 6.35. Let's check cotton while we're here on the topic. December cotton up 20 points at 69.25. So the soybean complex here, do you think that we'll be able to hold on to this? Because we did see some significant sales last night of meal to the Philippines. In fact, we did see soybeans firm up here about 9 o'clock or so this morning.
Right, and the meal contract is the only thing in the complex that is positive on the session. I would note that with the exception of the report day last week, the December meal contract has continued to find strong resistance at the 200-day moving average, and we did fail just shy of that this morning on that bounce that you had referenced. If we can get back through that on some continued demand, I think that would help the soybean contract hold this 980 support. But with that report that we had last week, there was a massive outside day lower, meaning we had traded above the previous session's high and then closed below the previous session's low. And it looks to me like this January contract has very, very important support around 980. So a breach of that could be bad news technically, but a lot of people are looking at the seasonals right now, and seasonally between about November 15th and towards the end of the year, we do tend to have a good bounce in the market. We're sitting right at about the same price for both corn and soybeans where we were this time last year. And we did get some higher values in the weeks to come last year.
Right.
So we'll see if we have that in store for us this year as well.
Okay, Brian Splitt here with us, and when we come back, we'll have a complete check of all of the livestock trades straight ahead here on the Market Day Report. All right, let's find out what's going on in the live cattle and the feeder cattle market here. Earlier in the day, we did start out the day quite a bit weaker, particularly in the deferred contracts, where we were a little over $1.50 weaker, and we're going to get analysis from Brian Splitt here in just a moment. As we look at these numbers here for the live cattle market, we see here that as we're about midway through the session today, we're starting to turn things a little bit firmer, and the reason I say that is because December down 13, 120.45. February live cattle down 40, 126.35. But April live cattle are now up 2, albeit that is a small bounce here, but 127.12. So Brian Splitt here with us with Allendale Incorporated. Brian, can we firm this market, do you think, on the fundamentals that we currently have in front of us?
Well, I think the trade is in kind of standby mode right now. We've had 2 weeks where cash was just on fire, and going into the end of the week last week, we did not see that scramble for extra cash product. If anything, the cash price was down week over week. So I think that's why we started off with a little bit weaker tone. But we did brush that off very early, and it looks like the December contract went up right to the same spot that we saw the market get to late in the day on Friday, that 120.75 level. So I think if we can get through that and see some buying above that 121 area, I think the late shorts will start to cover some positions. And probably some of the shorts that have been sticking around for a while, looking for this market to come back to potentially where they sold it several weeks ago, they're not going to want to let this market get too much higher here before they go ahead and bail. So I do think that we've got some room to turn back up here in the short term if this market runs out of sellers here.
Feel the same way about the hog complex?
The Deese contract right now, this would be what? Geez, the 9th day in a row of lower settlements. If we close lower today, we're going to start running into some serious moving average congestion here. The 200-day, the 100-day, and the 50-day are all sitting at 62.02, 61.67, and 61.60 respectively. So this market's going to have a lot of technical support right below it. Just the string of days in a row that we've had this market down would lend to the idea that we could get some kind of a dead cat bounce. And, we've had a really strong run from those August lows to the October highs. And right here is basically the 50% retracement of that whole run. So I think this is an area where, again, the market could pause, find some support, and look for a bounce.
Okay. All right. Brian Splitt with Allendale Incorporated here with us. Let's look at those lean hog numbers here before we wrap completely up here. Here at this mid-session, it's December lean hogs down 40, 62.08. February steady at 70.25. And April lean hogs up 3 at 74.08. And we'll be watching for those export inspection numbers here in just a little bit, as well as the cutouts as well, Christina.
All right. Thank you so much, Markets Editor John Jenkinson.
Thank you.